On today's show, we're going to discuss the USDA B&I loans as business and industry. We're going to talk about all the government guaranteed programs, including SBA 7A and 504. But mostly on this episode, we're going to dive into the USDA B&I loan amounts up to $25 million. It's a very amazing financing tool for businesses or properties or commercial properties in rural areas with populations less than 50,000. But we're going to walk you through as we assess deals. Does it make more sense as a SBA 504, 7A, or USDA deal? You're going to learn about the B&I program. You're going to learn about the Communities Facility Program and the REAP program. And anyways, lots of great government guaranteed loans. And take a moment to actually thank our government, our country, for having these great programs to promote job growth and business growth. Many countries don't have programs like this. So guys, take advantage of what's out there for you to start, grow, or expand your business with strategic financing. So stay tuned for a quick deep dive. Welcome to the 10 frequently asked questions about the USDA Rural Development Business Loan Program. We're going to dive into it today and much more. So USDA Rural Development Business Loans promote economic development in rural areas. We use a mapping system, and if the population is under 50,000, then most of the time it is in a designated area that we would be eligible for USDA. There's various different types of USDA loans. There's the B&I, there's the REAP, there's the Community Facility Loan Program. Generally, the B&I is the most popular, and you can finance up to $25 million. You can also bring in other financing tools in the capital stack, like CPACE if it's a CPACE eligible state, and municipality. So here we go. So eligibility requirements or criteria. Businesses must be in a town with less than 50,000 people. We have an eligibility map. I'll link it below. Must be an eligible industry. And then the various programs cater to different sectors: manufacturing, retail, healthcare, lots of segments. Then there's the community facilities, hospitals, things like that are all potentially eligible. Loan amounts, it's going to depend on the deal itself, but up to $25 million for general type of requests, and community facilities up to $100 million. And oftentimes you're seeing tax credits, you're seeing CPACE in the capital stack and other financing tools. So the program is guaranteed by the federal government. Lenders that are approved make these loans, and then the government would guarantee a portion of the loan, typically 60 to 80% would be the guaranteed loan portion. This could be used for purchasing land, buildings, equipment, construction expansion, or refinancing. Obviously not for personal expenses, consumer debt, etc. This is definitely a very flexible product, similar to the SBA 7A loan. Interest rates fluctuate. Some of them are going to be, some lenders are tied to different indexes. Figure Wall Street Journal Prime plus 1 to 3. Depending on the deal, terms can vary from 7 years to 40-year terms, depending if it's commercial real estate or not. Just machinery and business assets would be a lower term. They say there's no down payment requirement if there's collateral, sufficient collateral, but what we see with most lenders is that they're doing about 80% loan to cost. It's got to have a 1-to-1 collateral. So it's got to be collateralized with real estate. And this is unlike the 7A loan, where you definitely need a real estate component or some kind of equipment that would collateralize the loan amount on a 1-to-1 ratio. So you would need $5 million of collateral if you're borrowing $5 million. Minimum credit score, 680-ish. Lenders vary. Good credit history, good borrowing characteristics in general. Application process, complete application, provide financials, Form 413, financial statement. If it's a construction project, construction details, construction line item budget, all those things that go into a loan package. It's definitely not the fastest loan process in town. It will take a few months to close. The fees can be application, origination, guarantee fees. Guarantee fees are based on the loan amount. Fees can be rolled into the total project cost. Bad credit may impact loan, of course. Yes, personal guarantees for anybody that owns 20% or more, similar to the SBA there. And once again, the USDA supports rural businesses by guaranteeing loans from private lenders, typically banks and other authorized lenders, to promote economic development and job growth in rural areas. It's administered by the Rural Business Cooperative Service, RBCS, within USDA's rural development. The loan guarantees, again, is going to be between 60 to 80%, depending on the loan size. Maximum loan amount, $25 million on the B&I. It can go as high as $100 million on community facilities. Eligible borrowers, individuals, partnerships, cooperatives, corporations, both for-profit and nonprofit. Nonprofits typically can't get SBA financing. Indian tribes and public bodies. The benefits to the lender, there's risk management. Guarantees help lenders manage risk. They're going to do a little bit riskier type of deals because they have the guarantee. Meaning they might do a 60% loan-to-cost loan if they didn't have a guarantee. But since the guarantee is there, it promotes them to give as high as leverage as they can utilizing prudent lending. It's covered again, eligible loan purposes, land, building purchases, machinery, equipment, working capital, and business acquisitions. Special projects, energy, food development, community facilities. Banks use their documents and underwriting standards, so the banks are going to have their own, so each bank's going to be a little bit different. We typically always screen the deal with minimal paperwork before we would submit a full package. So I act as an advisor and help you identify the right USDA lender because they all have a little bit different appetite on what they like, what they don't like. Some have better pricing than others. You get higher scoring based on job creation, community impact, and consistency with economic development plans. So they're really trying to encourage economic development. Most of these guarantees, the day it funds, are going to be sold off into a secondary market, much like the SBA 7A loan and the 504 venture piece. All in all, the B&I loan, the business and industry loan, is a valuable tool for fostering rural development. It's really here to support rural businesses by providing access that they normally couldn't get and creating jobs in these rural communities. The key benefits for the borrower: easier access to financing. Guarantees help secure loans that might otherwise be unavailable or come with less favorable terms. Competitive loan terms based on the scenarios. You can amortize these deals up to, typically you're going to see on a commercial real estate deal, there can be a 30-year amortization. And then the key points are some of the eligible borrowing entities, like nonprofits, are able to be funded in these type of deals, unlike the SBA program. So if we're looking at this from a standpoint that one is you can get much higher loan proceeds, you can amortize over 30 years versus a 7A. You got to be fully collateralized with this USDA program, unlike the 7A. So really, when we're looking at projects, somebody's giving me an example. Hey, I'm doing this RV park or this assisted living development project. Okay, where is it located? Okay, it's a rural area. Boom. Okay, that triggers. It could be a USDA potentially. Still could be a 7A. Could be a 504 SBA loan. So these all have pros and cons of why we would use each product or not product. But usually, when it comes to loan to cost and loan size, USDA obviously can do bigger loans than both the 504 and the 7A. So it's just another financing tool to know about, because if you're developing assisted living or motels, hotels, community facilities in more of these rural areas, the USDA program would be a very viable option. Usually you're looking at projects that are at minimum 2 million, but generally you're looking at $3 to $30 million type projects. And so what we'll do is we'll evaluate what government guaranteed program makes the most sense: USDA, 7A, or 504. And there's different use cases for each. For example, the 7A, if it's a under $5 million deal, it's going to have a shorter prepayment penalty than the SBA 504 and the USDA loan. The USDA loan typically comes with at least a 5-year prepayment penalty. And also with the 7A, you can get a little bit higher LTC. You can go up to 90% loan to cost as opposed to about 80% with the USDA. So really kind of wrapping this up, they're looking at job creation. It's got a broad eligibility. There's no size restriction for businesses, making the program accessible to a wide range of business types. There's no credit elsewhere test. Borrowers do not need to prove that they are unable to obtain credit elsewhere. That used to be a big thing with SBA programs, that term called credit elsewhere, that if you're able to get a conventional loan, you would have to prove why an SBA loan would be beneficial as opposed to the conventional loan. At the end of the day, the B&I program is really about economic impact, but as borrowers, it's a great tool to expand your business, manufacturing businesses, where you're in a more rural area and it's going to be a lot tougher to get a bank on board. Most banks are going to lend that are non-USDA or SBA guaranteed type loan product. They're going to lend in a geographic location. So if you're in a smaller community, there might only be 1 or 2 local banks. That loan might be too big for them, or too much of a risk tolerance for that bank, because they're usually smaller banks in these small markets. Whereas these government guarantee programs, such as the SBA and the USDA programs, are, they're partially guaranteed by the federal government, up to 80 or 90%, depending on what type of product. So at the end of the day, these programs are amazing. You hear me on this channel talk about SBA all the time, but we're seeing a lot more USDA deals lately. So I want to start putting out content around USDA because it is an amazing tool. And they allow for other financing tools in the capital stack, new market tax incentives, tax credits, CPACE, as we talked about. If it's an eligible state that's enabled CPACE, so you might get $25 million of bank debt as a USDA product. You might have another $8 or $9 million of CPACE in the capital stack with new market tax credits. It's all possible. So you see a lot of developers that are utilizing this in these products in the capital stack in these markets. USDA does allow CPACE in the capital stack. 7A does. They have some restrictions, but the 504, from my understanding, does not allow CPACE in the capital stack at this time. So as we're evaluating your projects, these are all the variables that we're looking to do. We work with different lending institutions to figure out how to get the deal done, how to navigate it, and get you the best terms possible. Anyways, if you have any follow-up questions or have a project you want to talk about, you can go to bookwithbo.com. I'd be happy to discuss any projects that you're working on, and how they all work and what product might be the best fit. So lastly, let's talk about the personal guarantee. Anybody that owns 20% or more of the entity would need to be a guarantor of the loan. What could be used as collateral? For USDA business loans, most types of collateral are accepted, including both business and personal assets, liquid or non-liquid. Liquid assets include cash, stocks, bonds, mutual funds, ETFs, money market funds. But most of the lenders that are making these loans, they want collateral such as real estate. Many of them won't use these other tools. Some of them will. Everybody has their own guidelines, how they overlay the USDA guidelines. So just keep that in mind. So when we take in the intake on initial package, these are all the questions we'll be asking so we can help source the right debt for your project. Anyways, you can go to bookwithbo.com We can talk all things financing, SBA, USDA, conventional, CPA's financing, and much more. Anyways, thanks for joining us, and we'll see you on the next episode. Hi guys, Bo Exian here. If you want to visit myterritorycheck.com to find out if the franchise we spoke about on the show, or maybe it's one you've investigated and you're trying to see if it's available in your market, you simply go to myterritorycheck.com and we'll do a quick search for you. You enter in your name, email, zip code, and we'll get back to you as soon as possible if that particular franchise is available. We'll also send other franchises similar to that if it's not available, so you can figure out what is available in your marketplace as you're diving into different franchise models. So go to myterritorycheck.com and we'll help you out as quickly as possible. See you soon. Hey guys, Bo Exian here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content. Hey guys, Bo Exian here.